Now for a business update, and while stock markets recovering after last week's rout, even though the spread of that new coronavirus continues, Yuka Royer is here to take us through the numbers. Yuka.
Well, Eve, last week the usual mechanism for bargain hunting just didn't kick in. But at the start of a new trading week, global shares mostly bounced back. This after the head of Japan's central bank issued an emergency statement pledging it would take necessary steps to stabilize markets. The highly unusual step taken by Haruhiko Kuroda followed a similar statement by the US Federal Reserve's chair Jerome Powell on Friday. The move added to rising expectations that central banks around the world were preparing to take coordinated action to respond to the coronavirus crisis. Well, let's look at the figures then. Here in Europe, a majority of sectors turned green at the start of the session. Major indices all up more than 1%. Paris's CAC 40 up more than 1.5%. But the rise is still modest compared to steep falls seen last week. Major European indices were down more than 3% at Friday's close. In Asia, Tokyo's Nikkei closed up almost 1% after that announcement from BOJ's Kuroda. The Shanghai Composite up more than 3%. Last week was the worst since the financial crisis for investors, with $5 trillion wiped off global stock markets. In just a few days, Wall Street stocks fell from record high levels into what's known as correction territory, a drop of more than 10%. The Dow suffered one of its biggest weekly drops in history, losing 12% in a week. That's not far from the market crashes experienced after the September 11 attacks in 2001 and the 1987 Black Monday. Back in 2008, though, the benchmark tumbled 18% in 1 week. Oil prices also bounced back from last week's four-year lows. International benchmark WTI and the Brent crude are both up by more than 3% now. At the start of the week, this as several OPEC members, including Saudi Arabia, have suggested they might decide on deeper cuts than previously expected to respond to falling demand caused by slower manufacturing activity and supply disruptions due to the ongoing coronavirus outbreak. The Oil Producers Club plus Russia are expected to meet on Thursday in Vienna as their current supply cut deal is coming to an end this month. Here in Paris, the Louvre Museum has shut down under pressure from employees afraid about the coronavirus spread. It's just the latest event to hit the tourism sector. In neighbouring Italy, the outbreak has dealt a huge blow to two of its tourist hotspots, Venice and Milan. Shirley Sitman takes a closer look.
Not even 2 weeks ago, the Louvre opened its doors 24 hours for 3 days to allow crowds of visitors see Leonardo da Vinci's historic exhibit before it ended. That was then, and this is now. The Louvre was shut down as its workers feared being infected by the coronavirus.
80,000 people visit the museum every day. This can become a major outbreak threat.
While the Louvre is keeping visitors out, other Paris venues would love to take some in. Like the largest Paris department stores, 1/3 of their sales are made by tourists from China. And their numbers have dropped since the country has been hit with the coronavirus. Their absence could cost 2 billion euros to France's economy. And now that coronavirus cases have emerged in the Paris area, tourists from other countries are canceling their trips to France. In Italy, the tourism sector is hit even harder, with the world's most popular and even overcrowded sites like Venice almost empty. The Italian government has set up a plan to help businesses cope.
In the first phase, which is imminent, we'll grant businesses payment delays. Then we'll intervene with structural measures. In the third phase, we'll relaunch the country's image to get us out of the emergency.
Tourism represents 13% of Italy's GDP.
Well, the tourism sector is hit hard, but the COVID-19 outbreak has dealt a devastating blow to factories in Asia. China saw its manufacturing activity shrink at the fastest pace on record in February, according to the Caixin Purchasing Managers Index released today. A slowdown in Chinese plants had a knock-on effect throughout the region. Japan, South Korea, Taiwan and Vietnam also suffered sharp drops in their factory activity. That's it for business for now.
Yuka, thanks a lot for that business update. Yuka Royer with us there.